So I started doing some deep research again back into NEO stock now that the price has fallen down into the $20 range. And shout out to 2007 Nick for actually commenting on one of my videos and suggesting that I look back into NEO stock. And what I found was spectacular. And in their most recent quarter, Q3, their numbers were actually very telling about their business. For example, revenue actually went up to $1.52 billion or 116% year over year, or even better, 16% just quarter over quarter. And whenever you compare that to a market cap of just $33 billion, what you get to see is just a price to sales ratio of 6.6 times. And whenever you compare that to a bigger name in the space like Tesla, you get to see a price to sales ratio of somewhere like 23 times. So this stock is very much on sale compared to its competition. And whenever you look at their other numbers like gross profits, for example, in Q3 of 2021, we saw just about $309 million. An increase, get this, of over 240% year over year, or over 26% quarter over quarter. I mean, that is a crazy amount of gross profit, but there is a difference between gross profit and net income. And what we see is that we're actually not net profitable. We actually have a net loss, and so there's no price to earnings ratio on this company. The net loss came in at just below $130 million for Q3, but we also saw a 20.2% decrease from last year. And whenever there's a decrease in net losses, that's actually better. In terms of their balance sheet, we see about $10.7 billion worth of assets versus $6.4 billion worth of liabilities. And what I like about these car manufacturers, Tesla does the very same thing, is they actually show their month-by-month deliveries, so you actually get a sneak peek of how they've been delivering their vehicles. So as of January 1st, we've been able to see all the Q4 numbers for deliveries, but this is not actually their earnings, just how many cars they've actually put out. And what we get to see here is this. So in Q4 of 2021, they delivered just over 25,000 vehicles, or a 44.3% increase year over year. That also closes out the year of 91,429 vehicles, which was an increase of 109.1% year over year. That's more than half the vehicles that they've ever delivered, ever, since the company's been founded over 7+ years ago. Now, this is where you get the future investing sneak peek, okay? Taking from their guidances in Q3 of 2021, we could see how many deliveries they were expecting. Now, we know that they actually achieved in their 90 percentile, but they also showed revenue expectations. So, taking from that we achieved their 90 percentile in their amount of deliveries, we can assume that in their actual revenues. This is assuming everything in terms of their gross margins and all their other expenses stay exactly the same. This is definitely not a deadpan answer, but what we will see is around $1.55 billion in expected revenue. Now, if past results are any indication of future performance, then we expect that their gross margins are actually going to improve, not stay the same. In Q3 of 2021, we actually saw a gross margin of 20.3%. This is the amount of money that they get to keep after all their expenses, right? Compared to 12.9% of last year or 18.6% of last quarter, we can see that this percentage continues to get better and better every single quarter. I do want to add in the fact, however, that we are facing some very heavy supply chain issues that may only persist in the short term. So maybe a year, maybe two, but in the long run, these should actually increase gross margins as we are getting better costs on our materials. Now, past all their quarterly earnings results are a bunch of other extraordinary stats and figures that I want to share with you. One of them being the fact that NEO is actually a Chinese publicly traded company, which comes with its own benefits and challenges that go with that. Like the fact that NEO is actually a variable interest entity, or VIE for short. This was a corporate structure created back in the 1990s for Chinese companies that weren't allowed to have direct foreign investors. This has been a very common point of tension for investing in Chinese companies over time. However, even more importantly, in most recent history, as China has been cracking down on a lot of tech companies that have been listed publicly on American markets. However, there are signs that this is getting better, and most notably, Alibaba, probably the biggest VIE company that exists on the stock market, is still able to attract investors of the likes of Charlie Munger, Warren Buffett's right-hand man to Berkshire Hathaway. So personally, if it's not going to scare a multi-billionaire investor like Charlie Munger, it sure is not going to be scaring me to invest in VIE companies like this. But also, speaking of NEO being a Chinese company, that is where most of their sales actually take place, in China. However, NEO actually plans on selling in Germany, Netherlands, Denmark, and Sweden in 2022, and actually reach up to 25 different countries by 2025. And if you guys have seen my videos before, you know that I very much like to take the venture capitalist approach of looking at the total addressable market as being my most favorite statistic for what a company can do. So the total global addressable market for the EV markets is valued at about $287 billion in 2021. This is also projected to reach about $1.5 $1.3 trillion by 2028 and registering a compounded annual growth rate of 24.3% between those years. And on top of that, if that wasn't enough for you, the Asia Pacific market is actually the fastest growing than any other region in the entire world. So what that tells us is that there's so much room for the EV market to grow, and yet NIO is actually growing faster than how fast the market is growing, meaning we're taking more market share. And William Li, the CEO, a young 48-year-old CEO, is taking this company to practically double revenue growths year over year consistently, and that doesn't seem to be slowing down from expected revenue growth into 2022. Now, I've showed you what the company does, and that's everything that's happening on the company side. But now I want to show you what's happening on the actual stock side, because those are two different things. And what we see is kind of interesting. One being the fact that we're seeing insider holdings of around 0.54% and then institutional holdings of around 39.22%. Institutional holding statistics can sometimes be deceiving though, because we don't know whether they're betting for the company or against the company. However, short interest to bet against the company as a percentage is just under 3% for this company. So very, very long in terms of the percentage of how much people are holding. Now, at the time of recording, the stock is around $20.33. It's during the weekend when I'm recording this. Happy Sunday. But 52-week high of around $64.60, where we see a 52-week low of $19.31. So we're just scraping the 52-week low on this company. But one important thing for the idea that we're going to recover back to those 52-week highs is the idea that the company's growing, obviously, and that we're not being diluted as shareholders. So then we want to look at their outstanding share history. Now, they have diluted shareholders quite a bit in the past, but mainly in the year of 2020. Nothing really has come since 2021 and into 2022. So it's been quite a while since we've been diluted, yet the price of the shares have actually dropped off of their 52-week high. And yet, whenever we look at the average analyst price target for this company of $59.46, that leads us to a total upside of 185%. All of this stuff added up has made for a very interesting, in my opinion, very undervalued stock. Thank you, Nick, for telling me about it. But if you guys, as the viewer, want me to continue to cover NIO stock, make sure you guys give me a like and subscribe down below if you want to see more financial content just like this.